caught the headline. Sparks fly on Wall Street over Tesla's current valuation. Subheadline: the electric car maker overtook GM in market capitalization last week. Is this just a bubble or is battery tech the future? Question mark. It's an either or question. Clearly, it won't be both. It'll be one or the other. That's the pull to bring you in. Before I dig in, though, the author. Who's the author of this headline? I don't know about you out there, but I'd like to sometimes click on the names of these authors for assorted major news headlines. The author of this piece, one Carl West. I'm on the Guardian website. I click on Carl West. It says, drum roll please, here's the bio. Carl West is a freelance business writer. That's fucking it. That's it. Carl might be a fine guy. He might be super talented. But that's it? That's the bio? I then poked around the internet. All I could find was a Twitter account with one Carl West posing with two small kids, each sucking on a lollipop. Carl, dark glasses on. Followers, 508. The Twitter handle, committing acts of journalism, freelancing for The Guardian, Observer, Daily Mail, own views. That's the setup. So for the commentary that I'm about to read, put out by a major publication, read by thousands of people, that's the bio. Bottom line, there is no expertise here at all. Again, he might be a fine guy. He might be very smart. But for whatever reason, he's decided he wants to be anonymous. The author of the piece is anonymous, and he has no expertise or anything that I can wrap my arms around at all. That's the setup. Back to the piece. The opening paragraph grabs you. Tesla, the electric car maker, briefly became America's most valued auto manufacturer last week when a surge in its share price saw it roar past General Motors. When the stock market closed last Monday, the market value of Tesla, which sold 76,000 vehicles in 2016, hit a whopping $50.9 billion, $64 million more than GM, which sold nearly 9.6 million vehicles. Tesla had already blown past Ford earlier in the month. Even with a soaring share price, though, not everyone's happy. They want to dig in deep to the fundamentals. For example, shareholders, including the California State Teachers Retirement System and assorted other names that really mean nothing to none of us, they're all looking for a more independent board. They're worried that Elon Musk might mess things up. He might go the wrong direction. I have absolutely no clue whether Elon Musk will mess things up, go in the right direction, whether battery tech will roar past our typical gas-guzzling cars. I have absolutely no clue. Guess what? You don't either. You don't have a clue. None of us have a clue. And that's the only admission that matters. Because the moment you make that admission, it's freedom. You have freedom. Anxiety, worry, concern, gone. Absolutely gone. You might be saying to yourself, what are you talking about, Mike? This is insane. Tesla has sold tens of thousands of cars and GM is selling millions. And the stock market valuation is the same. Mike, this must mean wonderful things. Mike, this must mean the end of the world. No, wrong. Stop thinking that way. It's not helping you. It's mental masturbation. How is it helping? It's not. Let me get into the numbers, the Tesla share numbers. Because as you're going to see, that's the only thing that matters. I'm looking on Google Finance right now, so I'm seeing a date. July 2nd, 2010, trading at $19.20. And April 13th, 2017, trading at $304. That's a jump, man. That's a jump. Now, if we go back a little, February 12th, 2016, a little over a year ago, it's at $150. So nobody with a trend following strategy stayed in from the $19 all the way to $300. Dropping to $150 after it had reached a high of $280, dropping to $150, plenty of people got out. No doubt, got out smart. Hit your stops, get out. If you're looking at a Tesla chart, you can see the breakout area originally in the 2013 range. That's when it really jumped up. That would be your typical late trend following entry. But from around September 2013 all the way until around February of this year, 2017, Tesla has been volatile as you know what. Absolutely. Chop City. Now you have most recently had an upward push, a new breakout. And these numbers that I'm reciting, this is all we have that's real. None of the other stuff is real. The stories of Elon Musk, Tony Stark inspirations, crazy driving stories of Peter Thiel, whether or not battery tech will overtake the world, whether or not Elon Musk will provide electricity for the globe. We can't know these answers. There's no way that we as individual beings with our own accounts desiring to speculate and make money, there's no way that any of us can know these fundamentals. And if you look at the chart of Tesla from 2013 to 2017, it looks like that. You can see all of the expectations and desires of man being the many men that make up the market, manifested in price volatility. No one knows. It's a constant. I'm going to bet some. It's going against me. I got to get out. I'm going to bet some. It's going against me. I got to get out. But here's the real bottom line for investors. Tesla stands at around $300 a share. It makes a very small number of cars compared to GM, Ford. But at $300 a share and breaking out and going higher, you either play the Tesla game long with a stop or don't play. But we can't afford to get wrapped up in headlines with our money on the line. Because Carl West, somebody who has chosen to be anonymous, has offered a piece of writing that presents two conflicting sides with no resolution. It's a soap opera for financial news. That's all it is. It's the same thing that unfolds in sports, Hollywood, whatever entertainment. This has become entertainment. People get the same fix, the same rush inside their brain, inside the 6 inches between their ears. They get that same rush to read this kind of stuff, to get excited, to feel something. I know something now. I can debate Tesla, either pro or con. No, you can't. There's no one that can predict any of this. And I am not using Tesla alone as an example. You can go back from April 2017, and you can go back 300 years, 400 years, 500 years, 1,000 years. I literally list these events in my new trend following edition. I lay out the psychology of the new thing that's always coming along. Now, here's the tricky part. When I look at a chart of Tesla, these types of charts usually don't end up going to the moon. It just doesn't happen. But you can't use that knowledge to not play the game. You have to play the game with rules and stick in the damn game no matter what. Because you can't predict the next Tesla success. So when you're on board at $300 a share, attempting to say this is overvalued or undervalued, no one knows. All you can know, if you're long at 300, have a stop. That's it. Enjoy the ride. You absolutely can do nothing more than enjoy the ride. And enjoying the ride means letting go. I'm the first one to admit that I'll read the headlines, I'll read one of these articles, but I don't do anything with it. I like to throw it out there and see what sticks to the wall, let other people jump into the scrum and fight over the table scraps. I always find that an interesting human behavioral experiment because people can't help themselves. They've got to have an opinion on this article. What they don't realize is that a boardroom, a major media company, writes these articles nonstop, day after day, with anonymous writers, typically young journalism students right out of school, for the sole purpose to just get you to read. That's their business model. Some ad is either popping up on your screen or tracking you in a cookie, and that's it. They've got the fish hook in you. And they're going to track your ass around the internet, and they're going to try and sell you something. And it's all done through the clever headline of "Sparks Fly on Wall Street over Tesla's current valuation," which means absolutely nothing. Will never help you to make money. Will probably help you to lose money. Won't teach you a damn thing. And yes, major media companies and Wall Street are in cahoots together to play this game nonstop, day after day, every second, every minute, every day, every week, every month, every year. They don't stop. And what I find so damn fascinating is the alternative. There is an alternative. Trend following is a fantastic way to learn how to have a better life, to let go, to see the world through a different lens, to take the rose-colored glasses off, to take the horse blinders off, and see the system that's being played against you for what it is. And look, I salute these folks. They're good businessmen. I don't know a damn thing about a Tesla. I've heard Van Tharp, for example, say he loves his Tesla. And for all I know, battery tech and Elon Musk, he might be the richest guy on the planet within a couple years. And I guess it makes for great cocktail conversation if this is what your definition of great is. But here's the bottom line. Take the trade when you get the signal. When you have the momentum on your side, take it. Have a stop loss and ride that sucker. Ride that trend. Ride it to the end until it bends. That's all you got. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, Trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.